And now we cross over to our Oseong for global insights and an in-depth look at important developments in world affairs.
Thanks very much, Woogyeon. It is indeed time for Global Insights, where we connect with experts from around the world on issues making headlines. As price levels continue to surge around the world, central banks are tightening their monetary policies to suppress further inflation. And this has actually made cryptocurrency all the more attractive as a hedge option for investors everywhere, including here in South Korea, where daily crypto transactions have actually surpassed that of the main bourse Kospi. We discussed this trend today with James Royal, writer and stock analyst based in Washington, D.C., and Aswath Damodaran, professor at Stern Business School at New York University. A very warm welcome to you both. It's a very exciting issue to discuss today, and well, we have quite a lot of questions to cover. So let's start with you, Dr. Royal, joining us in Washington. Now, here in South Korea, the number of crypto exchange users have soared to more than 7.23 million as of July, from around 1.5 million at the end of 2020. So an around 6 million jump just in a matter of 6 months. And while daily transactions have actually beaten those of the main bourse Kospi. So you can see that there's growing preference for cryptocurrencies, and this actually seems to be happening globally. So my question to you is, why are more and more investors turning to crypto assets rather than the stock market?
Well, certainly part of this is that there's a lottery ticket-like atmosphere. The more these go up in value, the more people are attracted to them. And at times we've seen really high returns in these types of assets, sometimes thousands of percent just over a period of a few weeks or a few months. And so, or in the case of Squid Coin, for example, 230,000% in just a couple weeks. And so that also leads to fear of missing out. So people pile in because they see a neighbor making 100%, 200%, 300% in just a short period of time. But I think also part of that is a misunderstanding of what you're actually investing in when you're investing in one of these currencies. They are not backed by any fundamental hard asset or cash flow, unlike a traditional stock, for example. So you've got no claim on that. So that helps contribute to the lottery ticket-like atmosphere. And then finally, a lot of these products are deflationary by design. So they're designed to go up because there's limited supply. And so as traders pile in against a fixed supply, that helps push up the price. So they're really structured in a way to go up. And this helps give them a lottery ticket-like atmosphere, but also a confidence game type atmosphere.
Well, there certainly has been a lottery ticket-like atmosphere throughout the pandemic, especially. And well, Professor Damodaran, now, high levels of inflation aren't usually great for stocks. And indeed, here in South Korea, the main bourse Kospi has been on a downward trend recently. But then in the United States, where you are, the S&P 500 did quite well last month. So what explains these quite different market reactions?
Month to month, who knows what drives stocks? I mean, it could be fundamentals, it could be mood, it could be momentum. All of this year, we've had two forces fighting it out in the US. One is the expectation of growth, which is we're coming back from COVID, there's going to be economic growth. On the other, you've got this worry about inflation. And I think over the year, growth has beaten out inflation, but the battle's not over. I think this is something we're going to see fought out over the rest of this year and through next year. So I think it's too early to pass judgment on where U.S. stocks have come down on this, because I think the fight is still on.
I see. And well, Dr. Royal, it seems that there doesn't seem to be an end to this inflationary pressure, and nobody really knows when it's going to end. So with price levels surging, inflation seeming to be uncontrollable at the moment, do you see crypto transactions and valuations continuing to surge?
I think we'll continue to see it, but perhaps for reasons that are outside of the inflationary environment, right? We'll continue to see total market capitalizations continue to rise, despite perhaps some setbacks where you have China, for example, that's outlawed cryptocurrency. And that might have put a temporary speed bump on the road, but I think we're going to continue to see this. As long as demand keeps hitting that fixed supply, we're likely to see prices of Bitcoin or Ethereum continue to rise. So until we see a real kind of event that an existential crisis, so to speak, that forces the market or crypto traders to reassess cryptocurrency, I think we'll continue to see prices rise and total market capitalization rise. It's already now at $3 trillion.
And well, before we move on, Professor Damodaran, just another quick question here about inflation. Well, Fed has been insisting that the factors behind the upward price pressure are transitionary. What are your thoughts on this?
Come on, let's get out of denial here. I mean, I think we started the year with the excuse that it was coming out of COVID. Now it's supply chains. I mean, the Fed, like everybody else, is composed of human beings capable of seeing whatever they want to see. I think at some point in time, you've got to face up to the facts that inflation is here. Now, we can debate whether that inflation is going to be 3%, 4%, or 5%. But to sit behind a desk and say, you know what, inflation's not there, is just being in denial.
And well, while inflation continues, Dr. Royal, which sectors do you think are going to do quite well?
Well, I think about it in terms of investments, and energies and commodities typically do well traditionally in response to inflationary pressures. Real estate is often a good investment and perhaps particularly attractive now given historically low interest rates. So you can lock in financing for a real estate purchase potentially for decades and either own that asset or rent that asset. But one of the things I try to focus on is, instead of sectors, individual companies. And you're really looking for companies here that can pass on price increases and ideally not have to absorb price increases themselves. And so in that type of environment, they can take advantage of not having to reinvest in their own fixed assets, reinvest in their own inventory at increasingly higher prices, and yet they can also pass on price increases to others. So I think, for example, businesses like royalties businesses such as a McDonald's or a Yum Brands, that their franchisees have to invest in the fixed expenses, but the royalties businesses just take a cutoff of sales off the top and can pass on price increases. So in general, I look for businesses that can pass on price increases over time, and generally those will do well over time.
And well, speaking of individual businesses, Professor Damodaran, I know that you've been speculating on Tesla, and well, they seem to be coming up with some exciting news and developments all the time. What would be your current prediction or your thoughts on Tesla's latest market moves?
I think you mean speculating with words, not speculating with money, because that's not my game. I mean, I value Tesla for the first time in 2013. I valued them every year since. I mean, let's give the company credit. It's been one of the most amazing stories of equity markets of this century. So I've told people, I've been quite open about the fact that I've been wrong at every step of this process. I bought Tesla in June of 2019, but I've been out of the market. That said, though, this is a stock that attracts very, very divided attention. On the one side, your people are convinced still it's a scam, that Elon Musk is the biggest con man in the face of the earth and the stock is worth nothing. On the other hand, you've got true believers who think Tesla is going to be not just a great stock, but the greatest stock of all time. It's difficult to talk about Tesla without getting attacked by both sides. I do think that Tesla was tailor-made to take advantage of COVID, because COVID created winners out of young companies, growth companies, risky companies, flexible companies. And if you had central casting create a company to take advantage of what happened during COVID, Tesla would be it. So one thing we can't argue with is the fact that Tesla comes out of this crisis a lot stronger than it did going in. The question is how strong it is. And that's what we're debating in the market right now, because I think markets have gotten a little ahead of themselves in where they think Tesla can end up.
Well, whether it's very high growth companies or cryptocurrency, there's been a lot of speculation. There's a lot of, as you said, there's a divide between people who are very excited or perhaps getting ahead of themselves and people who are quite pessimistic about the whole frenzy. But well, as for cryptocurrency, Bitcoin and Ethereum, they hit record highs after news of higher than expected consumer price inflation in October. Do you think that Bitcoin and Ethereum can now be regarded as safe gold-like assets, or do you think they're in danger of being grossly overvalued? That's to you, Professor Damodaran.
Okay. First, I think two things. One is you can't invest in cryptocurrencies. You can only trade cryptocurrencies. To invest in something, you need something at the base of. So let's start off by taking the word investing out of cryptocurrency. You can trade cryptocurrencies. And I'm not sure that right now they're being traded as cryptocurrencies. They're being traded as crypto collectibles. And the reason I draw the distinction is the essence of a currency, you use it for transactions. And all this talk about Bitcoin is about trading Bitcoin. It's not about transacting with Bitcoin. So right now, the argument for Bitcoin seems to be that it's millennial gold, that if you're 35 years old and you're freaking out about where the world is going, rather than putting your money in gold, you're going to put in Bitcoin. Well, gold has had staying power for 4,000 years. Bitcoin's been around 13 years. Let's see whether Bitcoin can actually hang in there, because this is the first true test of Bitcoin being a collectible. It succeeded for a month and a half or 2 months. Let's see if it makes it through the next couple of years, because that really is something that we still don't know.
And Dr. Royal, well, the House of Representatives in the US, they passed a $1.2 trillion infrastructure bill, which includes a tax reporting requirement that could affect a large number of crypto companies. And there's also talk of introducing taxes on unrealized gains on crypto assets. So with regulation and taxation on the way, do you think this is bad news or an opportunity for crypto firms?
Well, I think ultimately regulation provides legitimacy to something like a cryptocurrency, where there is a lot of uncertainty about evaluation. And let's turn particular to stable coins, right, which are pegged or try to peg themselves to a fixed currency, to a real life currency such as the US dollar, right? And they say stable coins purport to have their assets backed, the coin backed by real assets such as cash. In fact, major stable coins are backed by a little bit of cash and a lot of debt, and that's not the same thing as cash. So, especially in a crisis. And so, ultimately, regulation, if it can iron out some of those inconsistencies and provide a stable framework and a legitimizing framework for some things like that, that's valuable. And then the tax situation, just broadly, you've already got a tax situation in the U.S. that seriously discourages the use of cryptocurrency as currency, right? So if you use cryptocurrency to buy and sell goods and services, if the value you receive is more than what you've paid, that's a tax liability that you've incurred. And while you might not get a tax reporting form for that, you still technically owe taxes on that realized gain. So that's important to understand here in the tax situation. What the pending legislation now is very broadly written, and it probably ends up being scaled back to some extent.
And well, Dr. Royal, cryptocurrencies, they are getting more and more diverse by the day, and some seem to generate massive speculation despite a lack of real world utility. What kind of cryptocurrency should new investors avoid?
Well, I don't see cryptocurrency really as being investable at all. I think it's, as Professor Damodaran said, I think it's a trading vehicle, at least right now. And so that's why you get somebody, a legendary investor such as Warren Buffett, saying, I think this is probably rat poison squared. Unlike a stock, right, that's backed by the assets and cash flow of an underlying business, most cryptocurrencies are not backed by anything at all. So you're trading against other people, and you have to basically think that somebody else is going to become more optimistic than you are about the future of these cryptocurrencies. And so if you insist on taking that risk, I think what you need to look for is a cryptocurrency that has a strong ecosystem behind it, that has a lot of functionality. But again, these are really trading assets, and there are a lot of people who do not believe in the long-term success here. They're really just trying to trade back and forth. And a lot of smaller investors are going to get caught up in that furor and probably lose a lot of money.
And before you go, Professor Damodaran, your thoughts on this as well. Do you think cryptocurrency can be controlled, or do you think it's better to leave it to the invisible hand?
Now think about it. Collective value of all cryptos put together is $3 billion. The market cap of Microsoft alone is $2.5 trillion. Think of how much time and energy we've wasted over the last 10 years talking about something that in the larger scheme of things is a side story. I think the fact is, with the amount of attention crypto's got, is being vastly out of proportion to its significance in the investment universe. If you're an investor, if you want to use crypto to get rich quickly, go ahead. But don't fool yourself into believing that somehow this is now going to become the center of your investment portfolio. There isn't enough value here to make that happen. So I think we need to be real about what cryptocurrencies can and cannot do, and also draw a distinction about why we think we're holding cryptocurrencies. Is it because they're a hedge against inflation and crises, or is it because we think we'll eventually be using these to actually do transactions? I'm not getting that clarity even from people who are advocates for cryptocurrencies.
Well, it looks like investors might not want to turn away from stocks just yet. Well, this is all we have time for today. That was James Royal, writer and stock analyst based in Washington, D.C., and as with Damodaran, professor at Stern Business School at New York University. Thank you so much for joining us.
Thank you.